Hi, welcome to an Easy Trader Update. This is Kim speaking on Wednesday the 21st of August. Okay, if you can't help, if you're following the markets, notice that the markets have been quite choppy recently in the last couple of days particularly, and quite consolidated. And what we're really seeing is that the markets or the traders are waiting to hear or see what was actually written in the Fed minutes. Now, so what are the Fed minutes? What's the significance? So I'll just run through that really briefly with you. Basically, the Fed minutes are the contents or the discussions held by the Federal Open Market Committee, which is made up of 12 voting members and 5 alternate members. Now, the 5 alternate members are still in the meeting, whereas there's only 12 members voting, and so often the detail will be picked apart, because whilst the votes may come out from the 12, it's also to see what the other 5 are saying as well and get a bigger idea. That's why the minutes themselves may be telling a little bit more than what you may see elsewhere. They're far more detailed than the initial announcement that's given when the interest rate or decisions are made. They show the opinion of the non-voting members, which I've just said, as well as those of voting, which is important to see the overall opinion, because they still can have influence on the voting members. Now, the voting members may speak openly to the press and give their view on the way forward. It's obviously their thoughts on the way forward, so the idea is the minutes may give us a bit more clarity. Whether that's true or not, we'll wait to see this evening. There appears to be 2 main camps that are sort of there at the moment. There's the hawks that are seeing the tapering of the asset purchases starting in September, so just next month, and then you've got the doves that really want to see the more data through first. So very much like the Bank of England group, you get the splits in terms of the doves and the hawks. Whilst tapering might start this year, the question then is how will it be administered, and this is what the market some of the guys really wanted to see, how's it going to be done. More importantly, the size of any reduction. The figures of 20 billion to 25 billion are being touted around, I've seen. The other thing is, what are they actually going to cut back in buying, i.e. are they going to cut back on treasuries more so, or mortgage related assets? So where's the cutback going to be focused on, or is it going to be equally balanced? The bond market's been taking quite a bit of a hit of late, since even the thoughts of starting doing some tapering. This may really upset the market some more yet. So very key to the actual markets, this information. So finally, what to really expect when the figure comes out. There's no clear signs here. This particular meeting may have a lot more weighting than previous, because previously the decision's been quite clear cut in a sense, and whilst they've been skirting around the tapering idea, and there seemed to be at one stage a bit of clarity made in terms of there's no chance of changing interest rates for a long time or the foreseeable future, etc. Now there's changes, at least in the asset purchasing, and this is pretty key to the market, because it is the earlier steps in any changes. Now it's being tied around employment figures, which you may have seen if you're one of our news-based traders. The employment figures are taking a much more bigger weighting than they were, because they're sort of looking for this magic 6.5 percent figure or below. But some of the tapering may start beforehand. The doves obviously want it to see some confirmation. There's some of the doves are actually suggesting that the employment figures, whilst they may be looking better, that there's reasoning why they're looking better, as opposed to it being a genuine growth of employment. So there's all sort of reasons on the whats and the buts and the ifs, but this is basically what the minutes come out with. It may give us a bit more clarity. We'll have to wait and see, but for now, hopefully that sort of makes it a bit clearer to why the big fuss, if you like, is happening. Okay, let's just have a look at the markets. Let me just get rid of this. That wasn't the best. Oh, there we go. Okay, so sorry, it's a pretty smallish chart that I'm looking at here, but what I'm looking at really is the This is the pound dollar at the moment. What we're seeing, we've run into the 500 MA. I've seen sort of, although we're getting higher lows, higher highs, there is the suggestion of some divergences depending on the type of indicator you're using. RSI is not showing any divergence at the moment. It's fine. It's moving up with the move, which is clear. But even so, the days are relatively small range days that we're seeing here. Sometimes these are the sort of moves that you see running into a reversal, but if the news that comes out from the minutes is particularly dovish, we could see the pound breaking the prior highs. And just pure technical, let's forget about news for a moment. The sort of thing that you might expect if it can actually close above the 500 here is further upside. Okay, we're coming up to the monthly R2, so that may slow things down a little bit. And provide further resistance, and in fact the previous highs are just below that R2, so even if it just pops through, that to me would probably be a reasonable resistance level in the short term at least. May want to run on later in the month, but for now that could be a resistance level. Now there seems to be sort of not everything's lined up in terms of what the euro's doing here. It did run up nicely yesterday. It was no surprise at the moment to see an inside bar forming after quite a sharp move up. It broke out through the prior highs here, so it moved up a little bit further yesterday and pushed, as I say, pushed through. One thing it hasn't done yet, which statistically I like to see it happen, is for it to hit its monthly pivot. Now it hasn't done that yet, and we could just be sort of set. If this is a top, well, in the coming days, maybe weeks, I would expect it before the end of August to be running back towards that sort of level. However, if the figures, as I say, the data, the release is particularly dovish, I think we'll see another push. And again, we've got this sort of key resistance of the R2s above for both of them. Now, around about 80% plus of the time, we're going to be closing back within the R2s. R2 on the S2, we're staying in these ranges, even if it doesn't, even if it pops out for a while, so it could push through that level. But it certainly would be a sort of resistance level, and I would expect price to be coming back towards the end of the month within that range. So that's where we are with the euro. Yen, sorry, it's going to be a single broker price here, but never mind, it will do. It's the same principles. It's already hit the monthly pivot, so there's nothing to really be writing home about here. It's much more consolidated. The yen is effectively slightly weak at the moment, although it's well, slightly weak. It's actually showing some signs of, I mean, it's trending downward, which is this is the dollar yen, remember, so effectively you would argue whether the yen is strengthening, although it's a bit mixed. It's very you see last few days very difficult to decide on which way this is going at the moment. Again, we're hoping that we'll get some clarity after the news comes out today, but at the moment it may just continue to strengthen and run down towards its prior lows here, and maybe the daily 200 MA. If we see a break of these recent highs, then we'll have broken out the trend that's running down here, and could easily run to the upside towards the 102 level. Now, if the dollar continues to weaken and we see the pound and the euro running up, well, we'd expect to see the yen moving down. So, realistic sort of targets for it then would be the S2 down here, and as I say, the 200. Okay, the euro yen. It's just again very, very choppy within this market. It's got this nice downward trend here, trend line, which it was earlier today. It was looking its best, like it was going to actually break out of it. Could still break out and close again. The euro's just holding itself again slightly better than the yen at the moment, although it's been very choppy. And it's just effectively got a little on this shorter term time frame here. We've got a bit of a sort of an expanding wedge here, which is there's no clear direction to where that may run. But the more important thing probably is this trend channel. If this can break this level, I'd expect somewhere in the region of the depth of the channel, as a rule of thumb, to be the sort of target upside. Although again, the R2 up here may provide some resistance, but we'll see how it runs. Things run, but it has been consolidating quite a bit here. Okay, that's it for me. I hope you have a great week. Kevin will be back or Charlie will be back on Friday as ever with some live trading. Take care. Bye for now.